Welcome to a video update on the 22nd of May 2020. Taking a look at the May market timing report. We're just working on the June one now, but there's a couple of key points. 19th of May saw a strong daily cycle, and also we do have some big monthly cycles coming in June. So as we're getting towards the back end of May, we need to be on alert. So I just want to take a moment to recap what's going on with a series of the world indices. And I've got the FTSE 100 here, which is our native index here in England. And you can see that we've pulled back, but we haven't even got as far as the 50% retracement. We've been hovering around the 382. So not a very strong pullback there. Again, if we look at the French CAC 40, the same thing. It's still trading below the 38.2% Fibonacci retracement. So both these indices here are looking quite weak. Australia, which is deemed to have made a great recovery from the COVID-19 situation, again, has only just exceeded the 38.2% level. Now, I would fully argue that that is quite a bullish pattern there in terms of these three high lows, and of course the course members will know how to read that chart. So that is looking bullish. So these three indices here are all looking like they're making some sort of recovery, but it hasn't been that strong so far. Here's the Hang Seng Index, again similar to some of the other charts, above the 382 but below the 50%. So none of these charts so far have hit the 50% level. The German DAX, however, has got up to this level and is actually trading above it. And the other market that's doing quite well really is the Nikkei, which has come up and it's above the 50%. So these are now looking a little bit stronger, at least compared to the first few markets we looked at. Now let's take a look at the American markets, and here we can see that the Dow has exceeded the 50%, again looking a bit stronger, a bit like the Nikkei. But let's have a look then at the Russell. That really has only hit the 50% level, so that is quite significant. That's a significant place. It did pop above it and it reacted off it previously back there on the at the end of April. So we're back up here at this point. The S&P has exceeded the 618 retracement like that, and most notably the Nasdaq's almost back at all-time highs. Now one of the issues here is that we've filled this gap here. We've just filled this gap. That's quite important. So we're going to be retesting the highs potentially. So these are all quite significant points. What we're really seeing here is that the American markets are faring a lot better than the rest of the world. Well, that's obviously down to American fiscal policy, where there is so much money being pumped in to the economy. All of this will have consequences. I don't know what those consequences are, but in the short term, obviously the political plan is for the incumbent to win the election coming up, and that he feels he can do that with a strong stock market. Whether it's built on a house of cards or what, I don't know just yet. But the bottom line is the market's the only truth is price, and price is going up. Now, as I mentioned, we had a turning point around about the 19th. We'll have a look at that in a minute. And more importantly, we've got these big monthly cycles coming up in June that I would suggest will probably arrest the rate of up move if it's not arresting already. Let's take a look at this in a bit more detail. So just recapping, the 8th of May and the 19th of May were written down as potential turning points. Let's just go and have a look at the S&P chart. So if you're along the S&P, you wouldn't have been wrong to come out on the 8th. That there really was that was the highest close for several days before we got a substantial pullback. And the next date was the 19th, and again a similar thing, a big move up, and we haven't really gone. In fact, we haven't gone any higher than the high that was on the 19th. We've gone into a sideways move. So again, that would work there. Somebody did write in saying they thought the turning point had failed. It's too early to say if it's failed. In fact, I would argue it hasn't failed. And you do have to follow these cycles. Remember, there is a day's tolerance either side of them, but this is very clearly there, a point to get out at and protect your position. So you wouldn't have been wrong to do that there. That's the first point. Now, what I want to share with you is this. This is a very important line and set of lines that's coming in here. There is a lot more to this than meets the eye. For those of you who are in the trading course, you'll have received a separate video behind the construction of this. But what I want to point out to you is that this is quite a critical line, and if this is breached, then and retested, then we could head up to the upside. But in the meanwhile, given that we had this turning point on the 19th, so it was a little bit premature compared to this line. But this is now looking as a reasonable point of resistance here. So that's the first point I want to make, and it lines up there with the top there. We've got a similar scenario on the Dow there as well, where this point here is relating back to that point there. So these are quite critical lines, and this could well be the path either sideways for a little while, or even for a potential pullback. So that's all I want to point out to you right now on those. The key point is that I believe is that we are approaching, there is a weekly cycle this week, we're approaching monthly cycles as we're into June. The American government policy is supporting an up move in the market. The presidential cycle is suggesting a continued up move from here as well, which is a 4-year cycle. You'll find plenty of information on the internet about that. And in terms of what's the outcome here, do you go long, do you go short? Well, the report just says there's a turning point here. What am I doing? I think there's too much uncertainty. Take a position, and it's okay not to have a position. That's it. Only have a position when you know, as everybody's done the course, you have to be able to manage the risk. You have to have a defined target, and right now there is no defined target. Therefore, there is no way of managing the risk. So it is okay to do nothing. So that is my quick market update for today, the 22nd of May. Thank you.